Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Kristen Sullivan, Sustainability and ESG Services Lead at Deloitte. Kristen, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
You got it. And as we approach 2023, has there been a change in how companies view ESG compared to just 12 months ago?
Absolutely. I think the pace of change has been dramatic in just 1 year, and a culmination of a confluence of events in the market, namely the intensity of the impact of climate change. The physical impacts in particular have intensified dramatically. That in turn has led to a demand for greater transparency around how organizations, businesses in particular, are understanding, sensing, beginning to measure, and then transparently disclose performance around how climate risk, as well as opportunity and the strategic capacity of the business to create value long term. And so clearly we've seen the mobilization from a capital markets perspective around setting clear standards, regulation, and policy to really drive that investor grade disclosure at scale.
How have companies been preparing for potential SEC disclosure requirements in addition to increasing global regulations?
Yeah, I think it first starts with just understanding where your exposure, right? Thinking about your business model. Where do you operate? Where do you engage with business partners? How does the impact of your business manifest differently in terms of creating disclosure obligations through a risk and opportunity lens? So I think it started with, and what we've seen predominantly across the market is really organizations just really wanting to understand, what is my current state and how does that compare to at least what we see are included in the proposals? And so that step in itself is a pretty significant undertaking, but can really help chart that course to prioritize resources and actions to really advance preparedness.
What else should companies consider as they integrate ESG into their overall business strategy?
Yeah, I think what we've seen as a really, really helpful tool is really starting to integrate ESG, climate in particular, more systematically into the way a company evaluates and manages broader enterprise risks. Climate risk is business risk. Climate risk is financial risk, and really putting that established infrastructure that an organization has in place to really draw out insight, think about data differently to evaluate risk, impact, and likelihood across the organization. That can really bring the right visibility, bring the right monitoring mechanisms, and then establish the discipline, the governance, the rigor necessary to measure and report on performance.
There have been discussions around the perceived reporting burdens of ESG, but what are some of the benefits to the businesses? Because I keep hearing you talk about putting structure around strategy, and to me, that sounds like a benefit.
Absolutely. Absolutely. You think about this conversation of stakeholder needs and how increasingly stakeholders can influence an organization's ability and license to operate. You think about how having a better command, access to more timely data and insights can drive strategic choices, can drive innovation, can drive the ability to capture market share in the context of these changing regulatory dynamics. Employee engagement, you hear a lot about the expectations of employees as organizations are thinking about attracting, retaining, incentivizing, motivating, and rewarding employees. Really credible, authentic, strategic positioning around these issues is essential. It's table stakes to attract that quality, that talent, and overall the ability to more effectively manage risk and really drive that sort of operational efficiency and productivity is a critical way to enhance the value of an organization.
And speaking of employee acquisition and retention, what skill sets should companies look for when hiring employees who will be spearheading ESG strategy, measurement, and assurance?
Yeah, we always think about the need to, across all parts of your business, really upskill around climate implications. And so I think as organizations are looking at talent, whether it's strategy, whether it's finance, whether it's marketing, whether it's operations, whether it's engineering, it's really how do you bring that lens, that awareness of a broader set of information that can really help inform those choices that a company makes. And the talent being prepared and motivated to deliver on that is so critical.
And finally, what role does technology play in preparing for the potential increase in ESG requirements?
Technology is going to be essential. There's no doubt. We just released some research on just getting a pulse on executives' perspective on what's going to be necessary to really move from what has largely been voluntary disclosure, integration, strategic focus to a much more disciplined, regulated, and authoritative approach. Technology will be table stakes. Over 90% of the executives who responded to our survey indicated that they will be investing in technology to accelerate their ESG strategy and disclosure in the coming year.
All right, Kristen, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.